Right, we have sound, we have action, we are started. Broadcast is started. Hello, good evening, everyone. This is Kim Watson, and on the other end of the microphone is Charlie Burton. Okay, a brief introduction tonight. We're not going to discuss a lot about ourselves tonight. I think many of you will have know our backgrounds, etc., and what we've been doing for some time. And we got so many questions that came in from you guys. It was quite an interesting subject. Certainly one we love because it's what we do day in, day out. So we thought we would just go with the questions and talk our way through and exchange our experiences with you as we go through, because as I say, there's so many questions here we need to get on and going. So let's get cracking. Okay. Before we get cracking, one thing I would say is the idea of this webinar originally was really focused for people that have not traded in our trading room before or been with us in any way before. We are predominantly day traders with an element of swing, which is necessary, which we'll talk about later. But we are day traders. So we've been doing this for a number of years now. In fact, how long is it, Charlie?
What's that?
How long have you been day trading? You're reading.
Well, I was just seeing all the people saying hello. This new software, it's all so new to me. Day trading itself, well, really 2001 full time, but then bits and pieces before that, because we were sort of swinging it a lot more before that. But overall, trading wise, 17, 18 years.
Yeah. So. But anyway, the main thing here, so if those people, I know quite a few people from our day trading room have logged in and are joining us this evening as well. So we got some experienced people here as well that we know have, that are there. But I have a poll before we get going, and it's, I'm just going to ask you a question. If you could click on it, it's, are you currently or have you been day trading previously? There should be a little poll that's come up on your screen somewhere on the bottom right hand corner. I think the poll comes. I'm not 100% sure because it is new. Let me just start it. It'll help. There we go. So you should have the poll up now. And if you could click on that, that would be really, really useful, so we can get an idea of who's with us this evening in terms of skill sets, really. Well, in terms of whether they've been day trading or not. Okay. It looks at the moment that 70% of you are day traders or previously trading. So that you will know this question. The next question I'm going to ask you, what is day trading? Because a lot of people come in and are looking at day trading, and it's a bit of a question of what is it. My definition of day trading is generally you're taking positions which you're opening on a day and possibly closing all or part of the whole trade on the same day. So effectively, you're only in the position for a day. That doesn't mean to say you're trading 100 trades a day or anything like this, but you're trading in a very small time frame. So that's just a quick definition of what day trading is. But we'll go through in some more detail in a short while. Okay. A question we get, and we've seen this on all the Q&A that came through. There's a lot of people asking how long they need to be sitting in front of their screens. I'm going to ask Charlie this question. How long do you sit in front of your screen, mate?
Oh, it's not a lot. I'm around a lot, but if we take, for example, very briefly, very quickly, I tend to turn my computers on at 7:30. So, but whilst I'm doing that, I'm making the tea, I'm making my breakfast and everything else. So from sort of 20 to 8, quarter to 8 onwards, I will spend 5 to 10 minutes having a quick look at the markets. I've already done usually looked at them the night before, so I know what I'm generally looking for. I've had a quick look through them by quarter to 8. So any time from then onwards, I'm looking to trade. And so I then have a window from sort of quarter to 8 through till gone 9:30, if there's going to be cable news out, where I might be trading. But even then, I'm not sat there in front of the screen staring at them for that hour and 3/4 period. I'm getting ready, I'm making my breakfast, but I'm I am trading. And then, like for you, Kim, as well, then by 10 o'clock, usually I'm done trading by 10 o'clock, and I'm probably not then trading for the rest of the morning through till lunchtime. And then in the afternoon, from sort of, if there's news out at 1:30, then I could well be trading between that 1:30 window and 4 p.m. and that's pretty much it. So yeah, it's I think people think that you're staring at your screens for 8 hours solidly, and that's not the case.
Okay, yeah. I mean, the important thing, yeah, I totally agree with you. In terms of I'm sitting here, I actually have to sit. I say I have to sit there. We'll talk about later on, but we do have our day trading room, which we open, and it runs from around about 7 o'clock through to whenever Charlie gets bored. Effectively, I shouldn't really say that, but it does. He doesn't get that bored, and he'll come in and out in the afternoon, late afternoon, stroke early evening, particularly when there's news to be traded. So it's when there's trading to be had effectively in the afternoons, later afternoons. But in the mornings, as I'm sitting there, and same thing here. By 10 o'clock, generally, hopefully we're in a trade by then. Today was a bit of a funny day because we missed probably a couple of setups in the morning, but all our trading was done midday, which is a rarity as anything. It's around about the sort of midday time. But the important thing is once you're in a trade as well, you don't have to be sitting there watching it. There's this real misinformed thing in terms of you have to sit and watch it all. The great thing about brokers these days is you can take and set orders to close your positions off. There's lots of added things on like trailing stops, which I don't necessarily agree with, but there's certainly options to take the position once you're in the position. So in fact, in some of my trades in the morning, I would probably be in front of the screen for probably about 25 minutes and I could leave it. And sometimes I think if I did that, I'd probably be a little bit more profitable, but because the temptation is to see other things.
I'm quite often in the shower still whilst my trade's running.
Yeah.
And there's been a number of times where I've had to jump out of the shower because all of a sudden, like you say, they move to your target, and I forgot to put a limit order in to do that, so I've had to run down. But you're right, you don't have to be sat there staring at it.
Okay. Now some people are saying they're only seeing or only hearing chat and can't see a presentation. You may just need to refresh your link if you're having a problem. I don't know if you guys can all see the chat line or whatever else, but you may just need to refresh your links, but it's certainly projecting. Okay. Okay. Right. What equipment do I use, or what do I need? Now, this is the thing that when Charlie and myself started many years ago, we started using because we were trading options predominantly in shares. We were trading using just a laptop, and that was fine. As we started moving towards day trading, we realized that just one screen wasn't sufficient, and we needed something a little bit more. Thing is, we went to see a friend of ours that had 3 screens, and we came back, or 3 monitors, and ended up buying 4 each. But what do you realistically need? Certainly something more than an iPad, I would say, to look at charts. And depending on what you're doing, I would suggest you can add a second monitor. You need probably on minimum, generally in terms of hardware, a reasonable PC, but most modern PCs are reasonable these days, with just an extra monitor. So you just need the absolute minimum of equipment in terms of getting started. You can add to that, and a lot of our traders, I went to see a trader a week or 2 ago, and he had 6 full massive monitors were all tied up to one PC. Is a fantastic setup, but it's not actually needed. You can start off very, very on a lean, but on a budget effectively. And most laptops these days, and I say most because sometimes you need to have an adapter for them, but you can plug in a second monitor, and I would strongly recommend you just put a second monitor onto your equipment. But in terms of hardware, there's not a lot needed. Okay. Software. In terms of software, basically we're generally talking about charting software. You can, in addition to charting software, get news software, which will give you a feed of news, but we'll come on to that later on. But in terms of general software, charting software is you can use just about any charting software, providing you know what it's doing. And it's, when I say we know what it's doing, it's a fair comparison of what your prices are on your brokerage. Sometimes some of the charting packages are so far adrift from what's on the brokerage, they're not worth having. And the other thing is you need to just apply moving averages to it. The one thing with some software application and charting packages is they include Sunday as an extra day. So things like the 200-day moving average would be quite a way out, because it's given a 6-day week instead of a 5-day week. So there's things that you need to check like that. But in general, most brokers that provide MT4, the MT4 charting package, you can do quite a bit with it. You can float the charts out. You can do. We have within our trading room, we have things that you can add to your software or your MT4 package, which give you pivots and all the tools that we use. Yeah, you can actually apply those to MT4. You can apply it to, there's other software out there. We use eSignal at the moment. I say at the moment because sometimes we get a bit of lag on it and we get a bit quite frustrated. But the actual software to use is very, very simple. It don't ever go straight to eSignal's site and buy the full package off there, because you can get it for as little as $40 or around about £50 a month total, including feeds and everything. So you've got to be a bit careful in terms of what you choose there. But certainly think packages like eSignal are good, are very good. It's very easy. Again, if you're in our day trading room, we provide you with a template effectively, which sets everything up straight away. So in terms of software, you don't need masses of software, and certainly you don't really need live feeds of news. Okay, I'm going to hand this one over to Charlie to talk about here.
Okay, someone's obviously put strategies versus psychology, and I appreciate there's a lot of questions coming in. Just bear with us, because obviously your questions coming in we will move on to once Kim's gone through once we've gone through these slides. So by all means write your questions down, but we won't be answering those until we finish these slides, I don't suppose, but by all means you can write them down. Hopefully the majority of you can hear us. It looks like you can, and you can see our screens. It looks like it was just one or two that were struggling there. Strategies versus psychology. This was just a question, was it, Kim?
Well, I put it as a bit of a tease, actually, because what's most important, I think, is the key thing here. It's a bit of a teaser.
Okay.
There's a lot of people talking about throughout the question. There was a lot of questions on what strategies you use, and there was very few questions on psychology. But as we know, as traders, psychology is the major here. The strategies are important. I'll come back to that in a minute, but talk about psychology, you may.
Yeah, fundamentally you're right. There's a lot of people want strategies, and yet without the right mindset, and then they're useless. So you need to develop that hardened, thick skin as a trader in order to be successful as a trader. I remember when Kim and I first started, in the first year or two, I remember people talking about the psychology of trading and how important it was. And I remember, reading Mark Douglas's book, and but really thinking, oh, this isn't for me. Once I've got some decent strategies and I'm making a load of money, then I'll spend some time on the mindset. And it just doesn't work that way. You won't get anywhere without the mindset. So to me, I think psychology is way more important than strategies, way more important, actually, because it's all those key decisions that you make, the critical decisions I say under pressure, because it's not necessarily under pressure, but certainly decisions you're having to make in the moment, so to speak, during the course of the day, those key critical decisions that you make, which are important. And if you haven't got that mindset, that trader mindset, then you're not going to be there with it. And we've got a lot of other questions around this. So I think we're going to come back to psychology, but I'm going to put a report together on psychology. And I know we've done a lot over the years on psychology, but I am going to put another report together, probably a written one. Rather than a video. on the psychology. I'm going to put all of my sort of notes and theories down on that, because without there's an element, you need strategies, but you need that mindset in order to take the strategy that one level further. There was some research that's been done that actually tests all the classical trading strategies, so head and shoulders, cup and handles, all of those sort of things. And actually, and it was an MIT that did this research, they came out and said that none, zero strategies actually had that much of an edge. So they said, but there's plenty of traders out there who are successful with those strategies. So what's the missing element? The missing element is that ability of a trader to be able to interpret those strategies, interpret the patterns, so that they know when to trade them and when not to. And it's those finite things that a trader, an experienced trader, will have, where they can actually make that decision to say, do you know what, I'm going to pass on this one, or actually I'm going to trade this one, but I'm going to downsize my position, or yes, I'm going to trade this one full size position. So all these small things that that traders do that makes the difference.
Right. One thing I'd say with strategies is that they can be the worst thing ever in a sense, because if the strategies aren't current, and I've heard of a lot of strategies that are floating around there and are suggested, if they don't meet the current the market conditions, they don't work. And there's a lot of strategies that literally come and go when the volatility changes, etc. So actually, if you're using poor strategies, it can actually adversely affect your psychology, because the more you're using a strategy and the less it's working, you start blaming sometimes the strategy, which may actually, in that case, not be working. And it's important that that you have decent strategies, but apply them using the right mindset effectively. Okay. Now I'm getting quite a few questions, or we're getting quite a few questions coming through in terms of additional questions, which is fine. But in terms of some of them, the guys, they will be answered as we run through. So it may be that some of you want to pop your questions on at the end, because we'll probably miss some of these questions as we run through. So if you've got specific questions once we've finished, it may be, or towards the end, we can take them then. Now, how many pairs do I need to trade? Well, it's really up to the trader. We're having a chat with Charlie yesterday in terms of what we're trading. And actually, Charlie, how many pairs are you trading?
Well, I monitor five pairs. That's it. That's enough. But then out of those, like Kim and I were talking yesterday, probably still, 70 to 80 of my % of my trading is just on two. And that's a euro, dollar, and cable. And I know, Kim, I think yours is even higher on cable, and that I think that's predominantly all you trade, aren't they? Or in the main?
In the main, it's around about 80–85% between the pound and the euro. Yes, and the reason that I trade those, just to give a bit of a reasoning why behind them, in terms of there are some pairs like the pound yen, which is very volatile. But it's a case of getting good at what you're getting good at, but also about getting filled at the right sort of prices, particularly when the market's quite volatile. You want to be filled at the time. What I've noticed in the past when I tried trading some of the pairs, because the market, the liquidity, particularly if you start increasing the size, the liquidity somehow it's not as good. You're getting more slippage. The thing is, I get very little slippage trading euro dollar, particularly when there's news around. The slippage is pretty minimal relative to if you're trying to trade the pound yen, for example. So there's a significant difference in terms of what you're doing. The other thing is that I find that the currency pairs have a bit of a trait. They've got a bit of a character, and you just get used to them. And so it's understanding what you're doing. So I would suggest that people do have a small group. I mean, it's important to have enough to be looking for certain trades. There's some days that the Aussie may be trading particularly well for whatever reason, news through the Asian session that's come out, and it works very, very well. But it's important to not try to be sort of looking at across 20 pairs, for example, and trying to trade 20 pairs. In my belief, I think it's you just covering things too thinly.
Yeah, and it's a different thing to swing trading. Swing trading, you can have more pairs on your watch list. But I can see that someone's asking about pound Aussie, pound yen, pound New Zealand. Like Kim just said, when you start trading some of these cross pairs, you have to be really careful of the volume levels effectively, like Kim's saying. And I mean, I was looking at, for example, there's New Zealand news out tonight, isn't there, at 10 o'clock? And I'll see my spreads when the news comes out on that pair. That's New Zealand dollar. They'll go out to 50 or 60 pips spread. You can't trade that. So again, it all comes down to, like you're saying, Kim, we want to trade the most liquid markets, and especially for day trading, because every pip you get slipped is a cost to you. It's a bit different when you're swing trading, because a few pips here or there is less important. But in day trading, it's a cost to your business.
Totally agree. Okay, what else we got here? Do we only trade currencies? Personally, I do. Charlie?
I do trade some of the stock indices as well. Usually the US indices. I know we've got quite a lot of traders who like trading the DAX, and that's good. And I will trade gold, but I haven't traded it for a while. And I will trade oil, and I haven't traded that for a while. But for day trading, it's mostly currencies, but occasionally I'll trade the stock indices. But yeah, probably 90% more so on a swing basis that I'll trade current indices.
Right. Yeah.
We have more than enough just with the currencies, don't we? Why do we need to be trading so many other things?
And there is risk. A lot of people forget about risk. I mean, the crude oil was one of the favourites. I spoke to people at an investor show earlier this year, and there's quite a few. Why don't you trade crude oil? It's brilliant. It's got lots of volatility, but people don't understand the risk behind it. They don't really follow. They touch things on the surface. They get involved and they start making a bit of money, but then all of a sudden something happens. And if crude oil, for example, you don't need too much to happen to create a massive whip in price, which won't be fit. It'll be a bit like the Swiss National Bank situation, where it won't get filled, and they'll get into real trouble on there, and they'll take a day to wipe out a month's benefit very quickly. So it's really understanding what you're trading as well. Currencies are pretty simple, and they're easy to follow, relatively easy to follow. And yes, we do get news situations. The Swiss National Bank one was an exceptional news item, but in general, currencies like the euro, the pound, it's well managed, and the news is managed generally from that, so it's easier. What time frames, Charlie? I'll let you start with that.
What time frames? For me personally, I in the main, I tend to use a 5-minute chart to take my trades off of, what I execute from, but I'm using all the way up to a 4-hour chart in my analysis, and beyond that. But if we just kept it more so for the day trading, up to the hourly chart, and then I'll obviously be mindful of the 4-hour chart. So it's all about multiple time frame analysis, but 5-minute chart is what I tend to use to find my entries off, but that's all based on, those entries are all based on the higher time frames.
Okay, yeah. I mean, I must admit, in the mornings we're often looking at when we take our trades, we're looking at a 60-minute chart. So some of our morning trades are taken from a 60-minute chart. It's my pivotal chart effectively in the mornings, is the 60-minute. Because of it gives us the shape of the market in the mornings. But again, I'm like you, off the 5 minutes, 15 minutes occasionally as well. I'm not looking down to 1 minute and 2 minutes. Someone in the trading room today was talking about 1-minute charts, and it really worries me, because sometimes it's a bit like you see everything. If you watch a 1-minute chart, it sets things up and it looks all exciting, and then smash, it gets absolutely just taken out from what's seeing there. It's not clear enough in terms of the bigger picture, and it's always that case of keeping the big picture in mind. This is a comment that was made to us. You need more winners than losers to be profitable. Go on, Charlie, you can fire at this one.
I think most people know that you don't, but some people who are new What we find is that newer traders want to be right as much as possible. That's the problem, and that is a problem because they want to have really high win rates. And you don't need to have super high win rates in order to be nicely profitable. And so yeah, it's just one of those sort of myths that I think that lots of newer traders cling on to. They want to be right as much as possible, so they don't like taking a loss. But what we have to do is embrace losses as traders. We have to accept that we're going to be having losing trades pretty much every day. So or most days, depend. If you're taking 3 trades, for example, there's not every single day. You're not going to have 3 winners out of 3 trades every day. It's likely you're going to have some losers in there, and so yeah, you just don't need to. But I do appreciate that for newer traders, it's hard to get their heads round. But it's all about profitability, not about win rate.
Okay, before we move on to this, to any other questions, there's a question that someone keeps on saying, and it says, what about COT reports? What about COT reports? What about COT reports? Let's cover COT reports, shall we? It's gone off the list of what we're doing here, but it probably shapes up what we're, in terms of us as traders and our experience as day traders, in terms of what we do in terms of preparing to trade. To explain, if you don't know what the COT report is, there is a section on our website in terms of the commitment of traders report. It's generally the hedge funds in terms of their positions, trying to look at the bigger traders and what they're doing with positions in the futures market. So it gives you an idea whether they're bullish or bearish, and you can gain a bit of an idea over a period of several weeks and months. The thing with COT report, it's always delayed. We get it on the Friday after the previous Tuesday when it's released. So it's like it really is delayed data. How can it really help us? It helps more on the swing, and it may give you a bit of a view, but you've got to remember that's a view of a load of traders that are probably, when they're hedging, they may be hedging against other positions, some cash positions with futures positions. They may be hedging their accounts or their funds. It's also, they're not always right. They tend to swing trade more, so they're into bigger positions for longer periods. We're day trading, so we're really looking at the shorter term volatility, what they would class as noise. We're trading, so it gives you, when you're preparing to trade, it gives you a bigger view of what's going on. It's a bit like looking at, we've got a load of other stuff on the site there in terms of which may help you in terms of looking at the order book and things like this. You can get an idea of where retail traders or from one of the bigger brokers, where the positions are placed. It will give you an idea where you may come across support and resistance and things like that. But a lot of these things, they're a guide which you should have there. I mean, I talked about it this morning when I did the video update on the Aussie. There's a huge amount of support at the 76 area in terms of buy orders. So if price pushes towards that area, it could well bounce, and it is, when I say a huge amount, it's significant on the broker we're looking at. But with these things, they're a guide at the end of the day, and we can take an opinion of them. But at the end of the day, what you're seeing on your chart as price is always what's happening, and that can go through everything else that we're looking at. So the COT can say, well, the professional traders or the institutions are bearish, but the market can still rally up a few hundred points. So we can only take what we can see. So hopefully I've covered that COT report one off now. Okay, getting questions. In fact, about brokers, and it's someone suggesting earlier on that we probably can't talk about them, and we're not allowed to talk about them. We'll talk about brokers that we use and what we think is good. I mean, one of the ones that we recommend is ETX, in terms of a lot of traders in the UK are spread bettors, and we know a lot of brokers personally through years of experience and being in the markets, and people approach us from time to time, and we'll meet them and look at what their offerings like, and we'll mostly say no thank you. We had one just today, and they claim all these things, and they say, oh, tell your clients about this, that, and the other. And the majority of them, they're too gimmicky, and if they appear gimmicky to us, we're not interested. So what's important? Tight spreads. Tight spreads are important, but you've got to be careful in terms of a lot of brokers have headline figures. There's what I call headline figures in reality. And tight spreads are great if you get filled on the tight spread. What we're seeing and what we've seen, and I can tell you, I've traded using lots of, and tested. I test lots of accounts. I mean, before we used the ETX and suggested to anyone to use it, we test it and see what the fills are like, and I compare it with other brokers. I use CurrentX, so I've got a broker that's probably in some real deep liquidity, and it's got tight spreads. I pay for the trades on that, as opposed to having. I mean, sometimes my spreads are almost zero, but I pay for the trade. It works out often that you're paying the same as what you would with a broker with a decent spread. So it makes a little difference. The important thing with all these brokers is not necessarily always the tight spreads, but it's the fills themselves. And the amount of time you press a button and you find you're a pip difference to what it was when you went to press it and what it became now. Obviously, there's latency and things like this on people's systems, but there were some brokers I tested in the past that had real good headline spreads, but why did it always move against me? Why didn't it ever move the other way is the question. So I question things like this. ETX, to us, they're fair in terms of what happens. It goes either way. It does go either way when you're pressing the button. The other thing with brokers, people ask about demo accounts. Should I be trading with demo accounts? Now, we may have slightly differing opinions with demo accounts. Personally, I think they're great to get used to using the brokerage. I actually, if I'm ever looking at a new brokerage, I might for a day just play with their demo account to get used to their system. Whatever, if it's an MT4, it's fine. I'm fully used with it. But if I'm looking at something that's a web-based tool, I need to have a little play with it first, and it's useful for doing that. But demo accounts for me, because just to explain, most demo accounts don't have the same feed, or they may have the same prices, but they're not necessarily what you get filled on a demo account isn't what you'd get filled in real life. I've had demo accounts where I've been testing them and just doing some news-based type trading on demo accounts compared to real accounts and on the same broker, and they don't rely. One doesn't. The demo account just fills you. The reality is you won't be filled there because there won't be a price there. The price has moved on too far, so it can lead you down the path of false expectation. And I think, as I say, personally, I would stick with using a demo account to get used to things. But you can trade with such small positions these days. It makes more sense to have real money in there and then build your money up. And as I said, preference is really ETX. There is one that we're also working with and be talking with, which we'll be putting on our site soon. But certainly ETX is a local one. We know them well. Okay, have you got anything to add on that, Charlie?
Nope. Good.
Okay, so our trading room, what is it? I mean, this was the primary reason really for the webinar in terms of people asking us about our trading room. I thought the best thing is if people hadn't seen what it is and what we're doing in the trading room, I'll just give you a screenshot. Now, this is quite an old screenshot actually on here, but it's a screenshot of the trading room that we're using. Basically, how it works, I'm going to just point to different areas. On the left-hand side here, it's the members that are currently in the room. Their names all come up. We use all sorts of names. I personally use, and Charlie, we use our own names, but there's some fantastic nicknames that are used through on the left-hand side there. We can project our charts. So we actually project, there's this chart I was projecting at the time, so we can project our charts on, so traders and everyone in the room can actually see in real time what our charts are doing. And on the bottom, in the bottom section, there's an area where the traders within the room can type in their questions, or in many cases, with the more experienced ones, what they're looking at, the prices. And what we don't encourage is people to tell us to just pipe up all of a sudden, I just made 30 pips, because we used to have someone in the trading room that used to do that regularly, or they used to use the term T1, which was target 1, T2, and it was a bit of a They were a genius, but reality was that we found out they weren't a genius, but they liked people believing that they were really good at trading, and they weren't very good at trading. And this is something we actually encourage people. If you want to talk about your trade, we're fine, talk about it, but tell us when you're taking it, or PM us, or do something. You don't have to put it live in there, but we're very, very open in our trading room. What we've got in the you can't see it too well, but there's a couple of tabs, and the trades I take in the morning, I actually print nowadays. I've got into a habit of actually printing the trade when we're taking it. So we're calling our trades out as well, or sharing some of our trades. I don't share all of them. I share a percentage of them, but I'll put trades in there, and we'll be talking through them before the trade is taken. We print down what we're looking for. We'll then take the trade, put the stops in, put the targets in. All of these things will be discussed before the trades, normally before the trade's taken. Sometimes it's a bit quick, and I may have to explain certain things as we go along, but majority of the traders in the room will understand it. Also in the room, we go through the analysis of the markets. I've just got one chart showing there, but we can do the analysis and keep on running through analysis, looking through the pairs on a regular basis. So we do joint analysis. A lot of the traders in the room are quite experienced now. We're getting a nice core of traders, which are really helping you effectively as new traders to the room. So it's a real community in terms of people looking out for each other. And the most important thing is questions. The questions that come from there are more important to other traders than anything else, because people are asking and learning from asking the questions. And a lot of people that may be a little bit shyer initially, that don't ask the questions, realize that everyone's asking the questions. And the questions that really make a community, as we like it to be, and it is, to make it a strong community. So that's what our trading room is. Charlie, have you got anything to add on that? I've probably covered parts of it, but
no, I think you've covered the main. What the room is. I think that when it comes to day trading, lots of people want to do it. And they do try and do it on their own, and all we hear is story after story of people saying, "Oh yeah, I got burned because of this, that, and the other reason," and they're trying to do it on their own because they don't know if they're right or wrong when they're trading on their own necessarily. If they're making that decision or about to make a decision which is right or which is wrong, and yet having that community, it's so powerful to have a community of other traders and where you're getting guidance every day. So that to me is the power of the room. We have a good laugh. It can be quite lonely just sat there in front of a computer screen, but you have to be disciplined. And so having something like a community like that, then it helps with all of those psychological things as well, and helping with the discipline, because Kim and I are ramming it down people's necks every day about discipline, but also, like I said, having that community feel, like Kim's saying, and so you feel that you're part of something and you're learning at the same time, and you're not doing it on your own. There's a lot to be said for it. There really is.
Yeah, and in terms of the hours, actually, someone's asked the hours, and Jackie, who helps them in the morning, she's actually often in about 6:30, I believe. I get into the room about 7 o'clock, but I have a little sort of program what I do in terms of in the mornings, and because what I used to do was at a certain time I would do a review of the markets, and the people in the room were fine. They got the review of the markets. What I do now is first thing I do is record what I'm looking at the market. So I do my analysis, and it really helps me just after 7 o'clock. So hopefully by about 20 past 7, 7:30, the analysis is done. It's on a video, so any people joining the room later on can pick it up. It's put on our blog as well, actually. We don't send it out by email, but it's on the blog. But the guys in the room can sit and watch it. Personally, I'm not taking many trades until nearer the 8 o'clock zone, normally anyway. So it's really that the first hour is analysis. We're then talking normally until about 10 o'clock. We drink a lot of tea in the room, or coffee. And someone asked what happens when you get the big losses. I drink tea. What happens when you get big wins? I drink tea. It's whatever we do in the room, we drink tea. I think in the mornings or it's maybe just me that I drink a lot of tea, but it's yeah, hours of the day. So what sort of time do you finish off with, Charlie, normally?
What, in the room?
Yep.
I usually turn the mic off around about 4, but it depends. If the markets are moving a lot, then sometimes we I say overrun because I'm always loose on when I come off the mic, but we could carry on chatting till 5 on some days if the markets warrant it. Or I might come off the mic and then come back on. Like yesterday, I came off the mic and then came back on at 6 for an hour. So it's quite loose, but certainly from when I come on the mic at 1, then I am on the mic from 1 till 4 definitely, and then it's a bit more loose from 4 onwards as to whether I stay on immediately or whether I come back on at 6 or whatever.
Fine. Okay. I'm just sorry. I was just looking at other questions. Do you do your Friday live trades in the room? Andy, well, Charlie doesn't. He may do them in the afternoon when he's in the room, but we split the room just purely. Another question came up a while ago is would you have you ever considered forming a prop trading desk and to take on good traders that have come out your program? We were having a conversation the other day about Ezeetrader and our lifestyles, and to be quite honest, we're quite happy just day trading and sitting there trading ourselves at our own place where we live, because we've got our own offices. We sit in the offices, and that's what we like doing. We don't do lots of massive courses. We don't do anything beyond day trading in the trading room, doing our video updates. It's a style of living. We can take a day off when we want to take a day off. We're not tied to going and traveling all around the world to do certain things. Yes, we get invites to go and talk. And Charlie actually earlier this year traveled across to Eastern Europe somewhere.
No, it was September last year, mate. It was Kazakhstan. Yeah.
Where was it?
Kazakhstan. Is that one? Yeah.
So he doesn't care where he goes.
But that was just a bit of fun, wasn't it? I wanted to go and see Kazakhstan.
Yeah. You came back quick.
Yeah, I did actually. I don't think I was quite there 24 hours. I wanted to get home actually, yeah. But it was an interesting trip.
Yeah, but coming back to it, I mean, we love. I mean, the community is great fun. I mean, in the mornings and the afternoons, we've got different characters in. There's a character that digs. Is based in Canada, and we're digging Charlie all afternoon. I understand. And there's great characters in the morning in the room. It's fun. The idea, it's fun. I couldn't think of anything more better in terms of getting up, trading, that I want to trade anyway because I need to make an income. So I'm sitting there trading and sharing experiences, times, and things with the guys in the trading room. So for us, if I had to go drive somewhere on a regular basis into an office, I think it'd be a bit too chory, and it's just at this juncture anyway. Well, I mean, we have talked about it, and Charlie's always talked about having this thing somewhere near where he lives, so he can probably only get there within 5 minutes.
Yep.
Where he's got poker tables, snooker tables, and things like this. So yep. I don't think he really has got the idea of the floor, has he? He's thinking of a games room,
basically a games
with
room.
A few laptops and PCs. So
yeah,
I think it's important to enjoy what you're doing. And we met up with a broker a few months ago, and he said, you guys are so lucky because we just enjoy trading. So if you can enjoy trading and enjoy trading with other people, we're lucky. But why do anything else?
Sorry, Kim, just very quickly. Herman, I know there's a load of questions here, but I just saw that one. Herman just said, is the trading room appropriate to traders in the East Coast of the USA? Yeah, it's an online trading room. That's what Kim's showing you there, just a visual of what it looks like. And then you can hear us just like you're hearing us right now, and you can hear us talking, and that chart that you see there, that will be moving live because it will be a live projection onto your computer. You can hear us talking live, and you can chat with everybody else live in the room. So yeah, it doesn't matter where you are really in the world. We have people, fun enough, we've got people in Texas, we've got someone else on the East Coast of the USA, we've got a few Canadians, and we've got quite a few Australians as well. So we do have people all over the place, Herman.
Okay, I'm just running through those questions as well. Friday trades, got that out of the way. Okay. Right. What is the mic? Gavin, the mic is the microphone. Sorry, when we're talking about being on the mic, it's on the microphone. So, Charlie, myself, you can hear us talking in the room. We're not all typing. I do type in, as I said earlier on, if I'm taking a trade, I'll type in normally once I've taken it, or when I'm taking it, I'm telling people so they can hear me. But the important thing, I like to have it printed as well nowadays. It's just really nice to have a printed record of where we are and what we're doing. It helps people that are coming in a bit later in terms of seeing what we've done in the mornings, or the mornings, mid-afternoon, early afternoon, or leading towards the afternoon. It just helps people. But Charlie and myself on the mic, we can let people speak, but the trouble is we had a situation. I used to have a Forex room many years ago. When I first started the Forex room, we used to do a webinar, because we had two rooms. We had an equity room, which Charlie used to run, and a Forex room that I used to run. And when I first started it, because a lot of people were new to Forex, I used to do webinars, and used to do them almost every day as an extra bit where they could ask questions, and we'd just do these sort of webinars. Trouble is, everyone had mics on, but the noise was horrific. So if we want to invite someone to speak on there, we can do, but generally it'll be quiet. It would be either Charlie and myself, or Jackie will speak, and there's one or two other speakers that we have in occasionally, guest speakers. Charlie offers in the afternoon. Okay.
Coming back to what that guy said about me trading the Friday videos, no, whoever it was that asked that, I know Kim sort of answered it, but yeah, Kim looks after the trading room in the mornings, I look after it in the afternoons. So when I'm doing my Friday videos, a lot of the time I've already recorded those and finished them by the time we get into the afternoon. But it makes no difference, because I still, like Kim does, I still call other trades in the afternoon anyway, and sometimes overrun on when I'm doing those videos, so I'm still recording even after I've logged into the room, a bit like last Friday actually. So it varies.
I'm going to take a few more questions here actually. Some of these questions we can't answer, because it's like, how often should you expect to be totally stopped out of a trade? It depends on the strategy you're using. If you know roughly your win rate of your strategy, it'll give you the answer. The important thing is, with which we'll come to, you always talk about risk and reward, is that your reward is bigger than your risk. You've got to have very high probability to have it any other way. And often those high probability ones get hit every now and again, and we've seen it. We've experienced, between us, we've experienced a lot of traders that have been wanting to put systems towards us, and we've tried running systems in the past, and we've had developers running all sorts of systems. A lot of these systems, they work on these very high probabilities, but you get one little thing and all of a sudden it all goes wibbly wobbly, and hence why we day trade, we manually trade. We can control what we're doing. In terms of scalping, Jamie, what would I call scalping? 7 pips and below, probably. Above 15, consider 7 pips. 15 pips be scalping. Depends. Different things to different people. 15 pips may be a scalp to some people. For a bigger swing trader, I think that's a little scalp. Yeah, I mean, it's just terminology, isn't it? In terms of what a scalp involves. We aim to, when we're trading in the morning, we're aiming for sort of 40-50 pips of the market if we can get it, or more, but it doesn't always work that way, and sometimes we may take for whatever reason, we may take during the day, may take a 15 or 10 pips trade occasionally, but I don't like in the room, there's no point in us calling anything less than that's going to make 10 or 15 pips, purely on the basis of, by the time everyone's placed it, if they're doing the same as us, they're not going to get filled and not make enough profit, and the stops have got to be big enough. So you got to look at what your stop is looking. To me, it's you can scalp, but you've got to be really regimented and disciplined with your stops. Okay, money. How much do you need?
Kim, what I've just started doing was just responding to some of the questions, because there's so many questions there. Some of the nice, so simple ones I've just started responding to. Do we want to scroll all the way down to the start? Because obviously and then start working our way up through the questions.
Yeah, I'll just run through a few of those.
Yeah.
Okay, we talked about brokers. We talked about pairs of what we're trading. What version of eSignal? Okay, what's a version of eSignal? You can get away with just on demand, and now they don't tell you this, and it's because they'll tell you, well, you can't get live feed with it; it would be delayed feed. But they do actually provide live feed with on demand. They'll give you 4x feed. It does have some limitations, but not for what we're using it to day trade 4x. So you can get away with on demand. It's significantly cheaper. You have a specified broker as opposed to the 200 brokers or whatever else. But we're on majority of the time we're only looking at single broker prices anyway. The chart actually that's shown on the screen there that you can see of the room, that is a composite price, and you can see the huge tails that's sitting up and down. In reality, with a single broker, you don't normally get that. And it's just purely the fact that it's a multi feed that gives it huge tails, and it always shapes up a little bit different. It's a lot clearer when you're just looking at a single broker. So I would leave advanced get. I normally use a different version of get when I talk about it. I think it's very, very expensive for lots of bells and whistles, but I would just I think if you're just looking at charts and you've just got a straightforward strategy, you really don't need a lot. And the more we've been trading recently, and some of the guys developing and putting our settings onto MT4, we have to say we've even got a template for MT4 for our settings in our trading room. So all those sort of things with the right timings, by the way, as well, because I know a lot of people said if you're in different parts of the world, you want the timings. So if you're working with pivots, for example, 4-hour pivots, so they work to the British summertime at the moment. All those things work well. I mean, the thing is, people can spend a lot of money on charts. Too much.
Sorry, Kim, I don't know where you are on the questions. Whereabouts are you?
I don't know, because they haven't got numbers on, have they?
No.
About Giles, any reason why you stopped trading the euro-yen as much and focused on currencies you currently favour? Giles, I'll trade what's got volatility. Euro-yen sometimes has lovely volatility. Often, I say often, but I stopped looking at it quite a lot, because if the pairings, if the correlation of the euro and the yen is pretty tight against the dollar, then you're not really getting the moves on the euro yen. So you just got to look at where the correlations are, and when they're heavily correlated, it's like the euro pound. The correlation often is very tight, so you're reducing the volatility that you're getting. So I want to get sufficient volatility. So where's the money? There's a lot more money on the euro dollar. It's about 50% of all trades is euro dollar denominated pairing. So there's so much more liquidity. Charlie, you got questions you want to answer on the way through there, because obviously
well, the problem is I'm a bit lost as to where you are. So
I'm now up to where you've been answering the questions.
Oh, are you? Right.
On the left-hand side, but then we've got the question and answers on the right-hand side, which I'm another row of question and answers. I'm working through the middle row, if you like, the Q&A ones.
Oh, okay, right.
Found some more. What do you use a second monitor for?
Right.
Okay, second monitor. Well, one monitor. I mean, if you're trading with only 2 monitors, you would have your broker most likely on a monitor, or you need some charting on one side and probably a broker on the other, so you can look at things at the same time. If you're trying to press a button on one thing, and it depends on how your setup is, but you just need to be able to see some screen effectively, see what you're doing. Otherwise, you're sort of, it's a bit one-eyed. Otherwise. Answered prop trading. Charlie, would you deviate from your trading plan? I mean, Gavin's question there.
Under what circumstances would you deviate? I wouldn't bother, Gavin. I would try and stay with your trading plan. So that would be the answer to that one. I don't think you should deviate from your plan. Because if you deviate from your plan, what's more likely to happen is you'll trade badly. You're more likely to jump out of a trade too soon, or put the wrong position size on, or all sorts of things. So no, I wouldn't recommend deviating from a plan anyway.
Have you ever thought about getting trading room members? This is obviously a trading room member asking this question for social events. Actually,
Answered that.
you've answered it. Okay, good. Oh, sorry, it's in both lines in that case. Now you can ask about your challenge. Go on, your 2-year challenge, which is now income challenge. What is your weekly income target?
Oh, right. Yeah, the weekly income target now, Andy, is about £1,000 a week currently on that. That's
I'll ask you a question. How are you doing against your £1,000 a week target?
Well, since doing the income, changing to income, which was interesting, shall we say. Sorry, the phone's ringing in the background at the moment. But yeah, it's a weird thing. I haven't had a losing week, touch wood, since starting this. So it's going reasonably well. I'm going to do the next update in November on that and show where that's at. One thing I would say with trading in this way, it's a pain in the neck. It's trading for income, so it's fine. But obviously, I want to be able to put my foot down here and there, and I can't because I have to put extra restrictions on what I can and can't do. Because when you're trading for income, it's different as to when you're trading for outright growth. So you have to protect the account a lot more. And so, you're up a certain amount and then that's it, you're done for the day. And so there's a whole raft of different decisions that you have to make when you're trading for income in that way as to when you're going straight out for capital growth. But yeah, that's where I'm at the moment.
Thanks. Okay. I'm getting questions here about, see the question, registered my interest in attending a live trading course. Are you guys planning a live trading course this year? Paul, it really is having 2 days away from the office in effect, or at home. We probably will do one later in the year. I'll sort something out, I think, later in the year, but it's not something that we do lots of. You are quite limited in a sense when you do them. You're at the reliant on something happening with the markets. I mean, last time we were lucky, we got some decent moves off, but sometimes it can be quite quiet. But we've got a great venue for doing them with fantastic internet availability. But it's just really a case of, a lot of people say they're interested, and then we go to do it, we get 2 or 3 people to do it. And realistically, in terms of spending the time and everything else, we'd like a few more in the room. We don't want masses, but it's got to be obviously to fill the room out a little bit more. Make it worthwhile doing it, to be quite honest.
It's a great question here, Kim. Why does day trading feel like gambling and guessing? Is there something I should be looking out for? Tarek, yes, because it certainly isn't gambling and guessing. If anything, I would say that with day trading, I can have a better feel of where the market's going next with day trading than I can looking out on the higher time frames. So yeah, so in answer to your question, it certainly is not guessing. There's a whole raft of analysis that goes on. You're not just clicking away and buying and selling. That is not what we do. In the main, for me personally, I'm looking at probably an average of, let's say, 3 trades a day. That's it. So what are you doing all of that time? You're sitting there like a surfer, sitting on your board, waiting for the right wave to come along. That's what you're doing. So no, it's not guessing and gambling.
Okay. Getting back to charting software, what do you think about free stock charts? Free stock charts is part of telecharts, John, which they include a Sunday on their dailies. It's okay for intraday, and Charlie will have the intradays up. Yeah, quite often use it and show it in his videos and use it, and it's it's fine. But for some of your analysis, you'll find it slightly out, and certainly the actually, it doesn't affect the hourlies too much, I don't think. Does it, Charlie? I don't use it. So.
No, it doesn't affect the hourlies, but once you go beyond that, up to the 4 hourlies, it changes a bit.
Yep.
Yeah.
So it affects the shape. So they're sort of okay, John, with some limitation. Once the day's going, if you're looking at the hourlies and below, you're fine. And the main picture will be there, but your moving averages may be differently. That's the most important thing, because some of the big moving averages are obviously going to affect you.
Demola, is your trading room accessible via mobile phones? Yes, it is.
One of the other questions I had, I think it's on the, it's all right. I did a PDF of the questions that came through when people were signing up, and they were talking about trading and the times, which we've already covered the times of the trading room, but in terms of methodology of how you trade, because quite a few people are going to work, and we've got quite a few people, or a few people that come in the room in the mornings and are signing off at 8 o'clock, 8:15, because they're off to work. So we've got people that do that. But in terms of managing, the one thing with you talk about mobile phones, the room will pick up on the mobile phone anyway, and iPads, because we have people come into it. In fact, if you see the little yellow things next to the names on the room that I'm showing you on the right hand side, that's actually people signing in using iPads, I believe, or some mobile device. But one of the things that a lot of people do is getting into the position and placing your orders is the most important thing. A lot of things afterwards with the technology that's available can easily be done from mobiles. The worst thing I ever listened to is I get to a meeting with Charlie and he's just told me, "Oh, just did this trade this morning on the train," and I may have driven or just not looked at mine. But with mobiles, you can certainly monitor what's going on. You can adjust stops and things like this on position. So if you get into a position earlier on, if you're trading with us in the room, we were into a position, you can go and move your stops at some point. And in some respects, sometimes walking away from a monitor is a great thing because you're less likely to do adjustments and get shaken out of positions. The psychology doesn't step in and talk you out of it effectively.
Terek, this is an interesting question. So we've got so many questions coming through. You're gonna have to bear with us. We're trying to read through them all. It just come to the top. Please point us in the right direction for honest, solid educators with proof of trading will help. Well, Terek, you don't need to look much further. So that's all I need to say to that one in answer. Easy answer, that one. I haven't read the rest of your other questions. Oh, he's got another question there. I'm still learning daily charts and I completely agree with you. Educators should be regulated. Oh, I see. Right. Yeah. I don't know where to start, Kim. There's just so many questions here. Andrew, how often should a trader expect to be totally stopped out of a trade? How often should you expect? Andrew, it does depend on the type of strategy you're using, but so really it depends on that. But how often? You've got to be looking at 40% of the time, probably, Andrew, as an average. So if you had a win rate of 60%, then 40% of the time you're losing, aren't you? So there you go.
Okay, I'll take a question on brokers, as I spent so many days, years, months working with looking at different brokers and price manipulation. Realistically now, whoever info at 23 degrees is, sorry, I don't know what your name is, but in terms of manipulation, brokers have got to be very careful these days, and it's more careful than ever before in terms of pricing, because they've got to be able to show, if you were to make a complaint against a particular broker, they've got to be able to show what their basis of their pricing is on. You've got to appreciate that a lot of brokers are not actually, well, some of them will be market makers, but they're still basing their price on a bigger market and a liquidity providers. Now, most spread bettors, or a lot of spread bettors, will deal with 2-3 different liquidity providers. So they're the people will take the other part of the trade and provide the numbers effectively. So in terms of manipulation, it's something that happens with some brokers will not fill you at such good positions. I think the biggest area of pain, if you like, is we don't do it so much now because the market's changed considerably after the Swiss National Bank situation in terms of trading news. But we used to trade a lot of news and we'd be in fast moving positions very quickly, and it would be how people got closed out of different positions. I mean, we would have people in different size positions, of course, but then we'd have people, we'd actually talk about the positions afterwards, and the same size position when one broker got filled and it didn't get filled with the other broker. Yes, they got different liquidity providers. Yes, they're slower. Sometimes the system, if you start trading with bigger positions, you start becoming manually effectively traded. So you've got to be careful what you're doing. But they'll be they got to be careful because they can't fill you too far away. Well, they can slip you a bit because they can say, well, there's no price there. We don't have a lot of problems day in, day out with brokers. It's not a big discussion in our room, apart from when we were trying to trade news, and there were a few brokers that were a bit of a problem. For normal day-to-day brokers and trading, their prices have to be proven. They have to. If you were to claim that they're actually doing me, you could take it further. In terms of the negativity, well, I'm sure the 1 pip here, unfortunately, that sort of situation cannot be broken every time you press the button. And if it's always a negative pip, it's a more difficult one. They might have to show their devices. There were some brokers a few years ago that are part of a bigger brokerage in the US basis that were taking MT4 and using it against traders. So they were always making money from the trader. They had a positive slant built into the platform. They didn't actually get penalized for it much more than a fine, and they got away with it as their usual thing, unfortunately, in that particular case. But in the main, the brokers have got to be very careful. So the majority of brokers, I'd say, the important thing is don't blame your trading on the broker, because we get some of that occasionally.
Charlie, on the BBC, you seem to take regular breaks from the screens. Yes, that's what I do every day. Is it responsible trading for you to use automated orders pre-sent in the morning to execute trades? Yeah, you can do that, as providing that's where your analysis is. It makes no difference. It's just your analysis. You put orders in and you put stop losses in. There's either going to go up to your targets and hit your targets, or it's going to stop you out. That's responsible trading to me.
Yeah, I mean, a lot of our positions, I try and encourage people just to put the orders in and leave them. And as I said earlier on, personally, I think my experience is when I sit by the screen, I can see more reasons to come out of a position I can do to stay in it sometimes. And we have to go through the reasons why we're leaving that one alone and why you should leave it down. You're almost proving yourself the other way. If you're away from the screen like Charlie is, you're not going through that because you're not looking at the fact that, oh, it's just coming up to a 5-minute 50, or oh, it's a 5-minute 200 now, or it's just retraced 50%, or whatever else someone may get. Every reason possible why to get out the trade before you should get out of the trade. Okay, I think we're just about there, Charlie.
I mean, there's a ton of questions, but I think you should. There's a lot of people who are interested, so you at least put the link out if people are. Yeah.
Yeah, I mean, for those that are actually interested in day trading and joining us in the trading room, the room is the key part about it. But we do have CDs, and so there is a level of education. We'd ask you to watch them before you come in the room. Now, the room costs £75 a month in terms of its the price of the room. But what we do, because we want to get people up, I mean, there's such varying education levels, and also in terms of understanding our strategies, what we do is we roll in 6 months of the room free with the CDs. So we produce some CDs. I'm just going to load the offer up, and basically, let's display. Hopefully, there we go. So you should have a little display button there. So if you, I mean, the normal price of the room is $997, and just under £1,000. If you apply the code SAMREF, and if you wanted to join us, you can get £200 off it by using that code. So you may want to write that code SAMREF down, but you can join us. And as I say, it's important when you go ahead is to just run through the CDs. I mean, some of you may be more experienced and understand things, but it's really a case of understanding what we're doing. Sam will send an email with because there's a lot of CDs there. It's actually beyond our normal day trading. We added how we started is we started with four CDs teaching people how to day trade, and then we come up with, well, there was a way of doing things, working with the momentum, which if you want to talk about the parallel bands and whatever else, That's part of momentum, and then final points, etc., all came in together. And then there was another bit of work that we added to it, and we've just piled all the work together. So there's about 3 sort of sections of work that have gone into the CDs. But as I say, Sam will tell you exactly the key parts of it that you need to really focus on, because there's certain things that we're doing day in, day out, which it will just let you get up to speed very, very quickly.
Herman, yeah, that's Kim. I'm stuttering because we have spent this evening explaining what the trading room is, and you've said, do you guide trades? Yes, we do in the trading room. We take our trades, like Kim said earlier on, in the room. You can see our screen live as we take the trades and executing and everything else. So yes, that's exactly what we do once we're in the room.
The CDs are videos, effectively. When I talk about CDs, they're not to put in the car. You won't see too much. Well, you can run them through some cars.
Yeah.
CD-ROMs, yeah. So you can just run it. It's a video, so you can watch the videos just like we do on our video updates. Effectively, it's the same Camtasia software we use to record. So you can run through them. They're in nice sections, so you can do a section at a time in a break, all broken up into sections on there. How many different strategies in the trading room?
Oh, yeah, there's a few that we can pull out, so to speak, Javier. I don't know. Kim's got his in the morning, and I've got mine in the afternoon. They're all on the discs anyway, or taught. So
there's probably about 3 or 4, Javier, that I tend to use in the morning. I mean, there's just a certain way of trading in the morning that I have a lot of the time, and it's working. We do like trends, but I also like probability. Done a lot of analysis in some of that's shared on the CDs, analysis using pivots, which are a fundamental part of my trading. Daily pivots, 4-hour pivots. Yeah, they're to me, because they don't move, they're very easy to measure. So I've got lots of stats that sit around the pivots, and they can guide my trades quite nicely.
I'll just answer a few here, Kim. Do we see Charlie swing trades in the trading room as well? The occasional swing trade I'll put in Demola, but I won't discuss all of the swing trades, because it's not fair on all the MBT people if I was just disclosing all of my swing trades in the trading room. So the occasional one, but not all of them. Dan, can we pay £75 a month the trading room without paying for the CDs? No, because you have to have the CDs. We have to have everybody knowing what we do, and that's why you have to pay. Effectively, you pay that upfront fee, then you get 6 months free in the room anyway, like Kim said. But that is what enables you to understand all of the other strategies that we use. It's not some sort of open forum. It's a closed-knit community where we all know exactly what we're doing. So you have to have all that information. Yeah. Phil, you're saying reduced price for 6 months for those that already have the day trading package. I would contact Sam. If you've already got the day trading package, then you need to email Sam.
Okay, I think that is just about it in terms of there are some questions. Look, guys, if you've got more questions, and there are a few I think we may have missed, but it's all in print effectively for us. We can come back. I mean, it's necessary at some point we may do another video, or we may just do a video on the questions that we've had. So since then we may have missed, because I am aware it's 8:15, and realistically,
I'm happy to carry on, but it's up to you. I mean, there's still a lot of people here, but I don't know. There's a lot of questions still coming through.
Andy, you can just renew your membership after 6 months. Sorry, in terms of that. Jamie, taxable income, yes. If you're spread betting, no. But you're assuming that you're going to make some money, which I like. Andrew, in terms of advantages, disadvantages of CFDs and spread betting, to be fair, spread betting is tax-free. CFDs aren't. That's the only advantage. The prices and everything else are identical. In fact, CFD, spread betting, and trading for real forex contracts, you're doing the same thing. It's just called spread betting because that law applies it. And yes, it is recorded, Paul. Demola, if you hit on that link I've given you on the site here, it's got the price of everything on there. You can actually get you want the MBT as well. There's the option of adding it on there at a reduced cost.
Phil, I don't know what your circumstances are. You'll need to email her because I'm not understanding your question in that case because I don't know. Email her and then she will always forward on your situation onto us and then we can then find out what that situation is. So yeah, I would contact her. It's realistic starting capital as much as you can afford, Dan. We've had traders who just want to get started and trading with some capital, and they've started out with £500 in an account. You're not going to make any income from £500. What you are going to do is at least it's giving you experience of trading with money, a very small amount of money, but trading. So, but the more money that you can trade with, obviously, that's within your capital limit, your comfort zone, then the better. So if you can afford to put 10,000 in an account, then great. But again, if you're a beginner, then and you had 10,000, I would still say to a beginner, well, put a couple of thousand in whilst you're starting out, and then you can always add to it in the future. Start small, work your way up over time. Correct, Dean? Andy, no, I don't think so. I don't know where that question is coming from. Maybe you mean to do that towards Kim about a webinar on 4-hour pivots, probably.
Yeah, I've got no intention at the moment, Andy. I'm doing a webinar on 4-hour pivots. It's something I've done before on 4-hour pivots. I believe I may have. But it's the sort of thing I would do as to the guys in the trading room as opposed to anything else. It's not something I'd necessarily do outside of that.
Paul, I know we're talking about the day trading, but can you talk about the MBT swing? Is there support for that? There is support in that I do a regular webinars, updates on it, or say updates, but webinars where I'm looking for new opportunities. And I do those about on average, once every 6 weeks. And occasionally I'll just send out a direct email video as well. So there is support on that. Ben, no, brokers don't charge you for taking your profits out of your account. No, you just take it out. How easy is it? You just click on a button normally and click on withdraw.
Some brokers charge you, believe it or not, mate.
Really?
Yeah, I moved some money not so long back from a broker, and they charged me a fee. The bank charges, they charge you the charges effectively, but their bank charges were astronomical. And I've never used them ever again. Not that I like them that much anyway, because I moved away from them. But yeah, they actually charged me a fee, and I was just couldn't believe it. But they said it was their bank charges.
Oh, Andy, sorry, 4-hour pivots. Right. Okay. Yes. Am I going to do a webinar on that? Well, I've already done that when I came down and gave you that talk. I don't have any intention of doing anything more. I've delivered that strategy to you. For those of you that were there, great, you got it. I'm not going to send that one out to everybody in the world. It's your advantage for being there. What percentage gains do we target a month? I don't, Dean, particularly. I think it's good maybe for newer traders or younger traders with smaller capital in their accounts to look at that sort of thing. But I actually look at more monetary than, for me personally, than percentage gains. Because you get to a point where, see, when you've got £10,000 in an account, then then you might say, oh yeah, if I could make 10% a month, that's, you know, it's £1,000, whatever. But when you've got £100,000 in a trading account, well, do you really need to be making 10% on that? Maybe you do. I don't know. But certainly, let's say when it goes to 500,000, are you still going to be trying to make that? What you tend to find is that the more money you've got in a trading account, the less you're trying to make in percentage gains. Just works that way, because the monetary amount is still very, very nice. You don't need to be trying to make 10-20% a month when you're trading on £900,000. You don't need to do it. So it tends to come down as your amount goes higher. So I don't even look at percentage gains myself, outside of the challenge stuff anyway.
Yeah, I mean, most important thing is having the money to buy what you want, Dean.
Yeah.
Oh, Gian, in terms of who the broker was, they were based in Australia, and the reason I had money in Australia is because the banks and the regulation in Australia is very strong. But anyway, I decided to bring it back because I wasn't particularly happy. It was, as much as the broker was in a safe place in terms of financially. This was back in 2007. I think I might have started putting some over there. I was moving money around to not get stuck with the banking problems at the time. But yeah, it was a bad experience in terms of getting the money back. Although they paid it quickly, there was nothing wrong with them from that point of view. It's just the fact that you did get a charge.
Well, that's why, because it was in Australia.
That's what I'm saying. Yeah, well, yeah, but I mean, it's just that their sort of bank charge was extremely high.
Right.
Like they'd added to it.
How is it? Oh no, I've done that. Okay, there's lots of questions here, but some of them are just getting a bit too random. So, have you ever used plus 500? It's just getting too random, guys. Sorry, Sean, but no. We tend to stick with the brokers that we use. I don't change my brokers from 1 year to another. Once I'm set, I'm set. So I've got a couple of brokers that I use in the main. I use ETH Capital for spread betting, and I use a straight FX broker for some of my straight FX trading. That's it, and I haven't changed them for years. I don't change them around once we're comfortable.
I do really think, to be fair, we've got to the end of the bigger questions. I think if we missed anything, I think Charlie's answered some of these questions in terms of the webinar and the MBT. Yes, it comes to, well, there's the options of that. There's, excuse me, there's a singing.
Sakaki, do you recommend alert signals or copy traders? Never, because most of those sorts of things, there's huge amounts of slippage, and you'll never get the same sort of returns to what are being claimed. So no.
Yeah, no, we got sent lots of. I can't show you it because it's got the name of the company. I would open the web page and show you the disgraceful performance of it, but it had a perfect equity curve when we were showing it originally, and we thought, this is brilliant. That looks good. And then all of a sudden, as soon as we started looking at it for a little while, you noticed the equity curve went all over the place, and for some reason they changed their methodology, and effectively what they'd done is curve fitted it to start with, and you don't know if it's real money in the first place. And the trouble with a lot of these things is they are so curve fitted in terms of back tested and whatever, and they can be why a lot of people don't like MT4 traders or whatever else is some of them can be, it's difficult to prove they are full cash. But this one, if it was full cash, it just went absolutely pear-shaped, and they took huge drawdowns and things like this. And yeah, they make money, but the drawdown side of things is horrendous for what they're doing. And there's a lot of them out there that's the same. We get quite a few people that have experienced it. It's only when you've experienced it you then leave it. Okay.
if you don't look at percentage, how much have you taken from the market? It's a bit like asking someone how much they earn, isn't it, really? But people always do that when it comes to trading. People won't tell you how much they earn for a living, but they want to ask you how much you do. But John, it varies from month to month, doesn't it? Of course. But in the last 4 weeks, I'm just going to go just very quickly, just mention this just to answer your question, and it does vary. But in the last 4 weeks, I've taken 16,000 from the markets, but that can vary from any month to a month, up and down.
Are you wearing headphones at the moment, Charlie?
Yes.
Now, sorry guys, you might not understand this. Is that because of something that you've gone ahead and are you going to have to be trading a bit harder for a little while longer now? For a deposit for something that you just ordered?
What's that got to do with headphones? Sorry, you've lost me on there.
I didn't want Rachel hearing you.
Oh, I see. Right, yeah.
He hasn't told his wife, guys, so hopefully Rachel never watches the video of this.
No, she won't.
Anyway, on that note, I think it's really time that we call it a day, guys, because my young lady's waiting for me to turn up. So I really thank you for attending. To say, come along and join us. There's a good deal there to be had. I hope to see you soon. And the regulars, see you in the morning. Yes, Dean. On that note,
you've got I take it, the on and off switch, Kim. So otherwise, I would say you go and I'll carry on with these guys. But I don't suppose I can do that.
No, I don't think so. To be fair, I think, bearing in mind this is a recording and it's going to go off
that's true.
the public to listen, it's going to be quite monotonous towards the end. So on that basis,
yep,
guys, wish you all the best.
Is that it? Has he switched it off? I don't know.